If you struggle to identify if the market is bullish or bearish, you keep getting stopped out of your trades and the market just looks confusing to you every time you look at it, then this video is going to fix your problem. Daily bias tells you exactly when to long, when to short, and most importantly, when to do absolutely nothing. And I'm going to show you the exact 3-step formula that I use every single day to figure it out. We're going to apply this concept on the nasdaq, but don't worry because this also works on other markets. You don't need a lot of time frames. All you need is the daily chart, the 4-hour chart, and the 1-hour chart. But before we dive into this, there's one thing that you need to know. The market can do 3 things. It can be on an uptrend, it can be range bound, and it can be on a downtrend. And I'm gonna test your knowledge now. So, what would your bias be for this daily chart on the nasdaq? If you don't know, don't worry, because I'm about to teach you how to get it. There's 3 questions we need to ask ourselves. The first one is, where are we? And to answer this question, we're going to take a look at the current market structure on the daily chart. And you can clearly see that this market structure is currently bullish. Clear uptrend, very similar to this line graph right here. So that's step 1, very simple. The second question is, where can we react from and where can we go next? To understand this, we first need to know how the market moves on an uptrend. And essentially an uptrend or downtrend goes like this. Price goes higher, tests some sort of bearish PD array. That bearish PD array will give you a reaction for price to go lower. Price will then go to a bullish PD array, and if that holds, it will find its current higher low and then continue higher. Do the same thing with another bearish PD array, react from it, go lower, do the same thing on the bullish PD array, react from it, form the higher low, and then go higher. And this will repeat itself until bullish PD arrays or bearish PD arrays start getting disrespected. Now, this daily chart right here is very similar to this line chart on the left side, where you can see that we have a clear uptrend if I draw a line on it. Now, what price is doing is we have right here, price went to this gap right here, tested it, filled the gap, went higher, formed an order block, and formed a fair value gap. Price then continued to go higher, went back down right here, tested the fair value gap, tested even the order block, and then started to go higher. What price is now doing is testing the bullish fair value gap on the daily chart and the bullish order block on the daily chart. So far, this is what we know. Market structure is bullish, and this is going to answer your first question. We swept some daily highs, and there's a bullish order block and fair value gap below that we tapped. And this is going to answer your second question. Let's give this another try. What's your bias for the next candle? If you said bullish, congratulations. This is exactly how you call the daily bias. And you can see that we came back down, similar as before, tested the fair value gap, tested the order block, and then we went higher until these previous highs, and we start reacting from there. And daily bias can be as simple as this. However, I'm not gonna pretend that the market is gonna be clear like this every day and end the video here, because in reality, it is not. Let's look at another exercise. You open your chart around 10 a.m. EST and the chart currently looks like this. What's your daily bias? The correct answer is gonna be bullish, right? We have the bearish tap of the order block right here, and you expect price to go higher. Same thought process as before. Bullish market structure, bullish PD arrays being tapped, you expect a reaction out of those to go higher. So your daily bias for this candle right here would have been bullish. Well, but now you're thinking the rest of the day clearly closed bearish. But just because your bias is bullish, it doesn't mean you can blindly long at the open and make a bunch of money. What you need is lower time frame context to see where the candle is likely to go during your session. So let's go down to the 4-hour and ask the same questions. Where are we? We are currently on bullish market structure. You got your high right here, your low right here, and price is currently trying to find its low, right? Where can we react from? We can react from this daily opening gap or this bullish order block. And where can we go next after this reaction, and that would be this inverted fair value gap. You can see already that your 4-hour time frame is giving you mixed signals where you're overall bullish, but you're starting to disrespect bullish PD arrays and turning them into bearish PD arrays. But don't worry, because we're gonna go into the lower time frame now. Same questions again, but on the 1-hour time frame. Where are we? We are currently on bearish market structure because we closed below this level. Where can we react from? Again, we can react from this daily opening gap or even this order block down here. And from this gap, where can we go next? And that would be this bearish order block right here, which would also align with the 4-hour inverted fair value gap. So let's recap this and try to understand it in a clear way. Daily chart, bullish market structure, reacted from this order block, and can continue higher. 4-hour chart has bullish market structure, it's reacting from the daily opening gap, can go higher, but only to this inverted fair value gap. And once it reaches that inverted fair value gap, it can start to pull back. 1-hour chart has bearish market structure, is currently reacting from your daily opening gap, can go higher, but again, only to this bearish order block. And again, it can pull back at any time and go lower. So daily chart is overall bullish. 4-hour chart shows bullish market structure, but it's disrespecting bullish PD arrays and giving you mixed signals. And the 1-hour chart is overall bearish. So now my question is, are you longing or are you shorting this market? Are you bullish or are you bearish? And the answer should be neither. And this is where most traders get daily bias wrong. They think that just because they have a bullish or bearish bias, they need to trade that day. You need to understand that not every day is going to be a trading day. So if you're feeling confused because your daily tells you you're bullish, your 4-hour is giving you mixed signals, and your 1-hour screams bearish, then you don't trade. Now that you know when not to trade, let's go into a real chart and I'm going to show you in real time how a clear daily bias that you can trade on looks like. I'm going to pick a random point in time on a real chart and show you how I do it to get my daily bias. So right now we can see that I've chosen the 21st of October 2025. So this is the 21st of October candle. We're trying to predict what's going to happen on the next candle. We're trying to see where the next candle is likely to go. So first question we need to ask ourselves, where are we? What's the market structure? Market structure is bearish so far. You got your break right here with this candle, and you got your high right here and your low right here. So price can do anything it wants in between here and still be bearish as long as it doesn't close above. So market structure for the daily is bearish. Next question, where are we reacting from and where we can go next? And this is where you draw your order blocks and everything else. We are currently reacting from this bearish order block right here, and we can even push, maybe tomorrow we can even push a little bit higher, sweep out these highs and go lower. But currently we are reacting from this bearish order block. Where can we go next? If I'm willing to be conservative, then I would say that the next logical place to go is going to be this daily fair value gap. So I would expect some sort of bounce in this area. However, I'm willing to bet that this fair value gap is not going to hold because you're on bearish market structure and you're currently reacting from a bearish PD array. What's the next logical place price can go to? And it's going to be this order block down here, or even this area. If you can count, if you want to count this as a whole order block, you can even count that. So to recap, where are we? Bearish market structure. Where are we reacting from? Bearish order block. Where can we go next? Either this fair value gap or this area right here of the order block down here. So now what you're going to do is you're going to go into your 4-hour, and you can see currently this is the 4-hour on the 21st of October. So I'm going to go ahead and fast forward to 10 a.m. EST, which is half an hour after New York session opens. So this is how 10 a.m. EST is going to look when you are finally ready to take your trade. And we're gonna ask ourselves the same questions. Where are we? So we're currently again on bearish market structure because you just break your bullish market structure right here after price closed down there, right? Where are we reacting from? Well, we're currently reacting from this bearish order block right here. And the next question is, where can we go next? What's the next PD array that can influence price to go lower? Well, we already tapped this fair value gap right here. That sent us higher to the bearish order block, and it's now sending us lower. So I'm not expecting this fair value gap to hold. In fact, I'm expecting it to get disrespected. So I would be expecting for price to come at least to this order block down here, or even to the daily order block down here that I drew a couple minutes ago. So to recap, daily, bearish market structure, reacting from bearish PD array, and we can go to the daily fair value gap or the daily order block. So there's downside potential on the daily. 4-hour time frame has bearish market structure, and we are currently reacting from bearish PD array. Where can we go? We can go to this fair value gap right here, or even this order block right here. So 4-hour also has bearish downside potential. Let's go into the 1 hour and see what it tells us. Now on the 1 hour, same questions. Where are we? Clearly, we are on bearish market structure. Where are we reacting from? We are reacting from this bearish order block right here. Where can we go next? Well, we can go lower. There's downside potential. And I would even say that we can go to this bullish order block down here. So 1 hour also has downside potential. Your daily has bearish market structure. Your 4-hour has bearish market structure. Your 1 hour has bearish market structure. Your daily is reacting out of a bearish PD array. Your 4-hour has reacted from that bearish PD array right here. And your 1 hour is currently reacting out of a bearish PD array right here. They also all have downside potential. Now, I don't know if this is going to work or not, but I'm going to put it in a video anyways, and I'm just going to play this. But my bias is bearish, and look at this. We went to that order block and we continued even to trade lower into the daily order block. So now, if you look at this daily candle, you can see that we clearly expand lower the day after the 21st of October. This is how clear your bias needs to be. All your daily, all your 4-hour, all your 1-hour time frames need to align like this in order for you to catch the high probability moves. This is how I do it every single day, and this helped me to become profitable during the last year.